Hey everyone, welcome back to Secure Your Benefits. Social Security that you need to know, from early hints about next year's COLA increase to payment dates coming up in May, and even new conversations in Washington that could affect your benefits in the next few years. Now, I know how easy it is to tune out Social Security news. Sometimes it all sounds the same. But in this video, I'm going to walk you through what actually matters to you, whether you're already collecting benefits, applying soon, or just planning ahead. I'll keep it simple, honest, and focused on what's real. No scare tactics, no guesswork. And stick around to the end, because I'll also touch on one common mistake that could delay your payment, and it's something a lot of people overlook. Let's start with what everyone's talking about right now: inflation and the cost of living adjustment for 2026. While the official number won't come until October, the first few months of inflation data this year are giving us a decent idea of where things might be heading. If you remember, we got a 3.2% COLA for 2025. That increase helped, but many of you told me it still didn't cover the rising prices of food, housing, and especially healthcare. And you're not wrong. Even a small increase in prescription costs or rent can wipe out that extra monthly benefit. Now, based on the CPIW, that's the inflation index used by Social Security, early projections are putting next year's COLA somewhere between 2.4% and 2.8%. That's lower than last year, and the reason is simple: inflation is slowing down. Gas prices are mostly steady, food inflation has cooled a bit, and housing costs, while still high, aren't rising as fast in most cities. But here's what's important: the COLA is based on July, August, and September's inflation numbers, and we're not there yet. So while this 2.4–2.8% range gives us an early picture, it could still shift. I'll be watching those numbers closely over the summer, and I'll update you as they come in. But even with a smaller COLA, some relief may come in the form of slower cost increases, especially in areas like energy and groceries. Now, let's talk about something many of you are waiting for: May 2025 payment dates. If you depend on your Social Security check to pay bills, this is crucial. So here's the full breakdown. If your birthday is between the 1st and the 10th of any month, you'll get your Social Security benefit on Wednesday, May 14th. If your birthday falls between the 11th and the 20th, your payment will be deposited on Wednesday, May 21st. And if your birthday is between the 21st and 31st, look for your payment on Wednesday, May 28th. These are the standard retirement, disability, and survivor benefit dates. Now for SSI recipients, if you receive supplemental security income, your May payment was deposited on Wednesday, May 1st. Nothing changed this month because May 1st is a regular weekday. But as a reminder, if the 1st ever falls on a weekend or federal holiday, that payment will usually arrive early at the end of the previous month. That confuses a lot of people, so mark your calendar accordingly. And if you receive both Social Security and SSI, your SSI comes on the 1st and your regular benefit based on your birthday, as usual. Before we move on, here's one quick but important tip: double-check your direct deposit info with the Social Security Administration. Mistakes with routing numbers, bank changes, or closed accounts are some of the most common reasons payments get delayed, and getting that fixed can take weeks. Alright, now let's zoom out and talk about the big picture: Social Security's future. I know this part can be a little dry, but it's actually really important. There's been a lot of talk again lately about when the trust fund will run out and whether future benefits will be cut. The most recent report from the trustees says that if nothing changes, the combined trust fund could be depleted by 2033. After that, incoming payroll taxes would only cover about 77% of scheduled benefits. But before anyone panics, let's look at the reality. This isn't a new problem. We've known about this shortfall for years. And right now, lawmakers in both parties are debating how to fix it. There's no final bill on the table, but the options being discussed include raising the cap on taxable income, adjusting how COLA is calculated, or even gradually raising the full retirement age for younger workers. But here's the key: almost every serious proposal protects current beneficiaries. If you're already retired or close to it, the odds are very high that your benefits won't be touched. Any changes are more likely to affect future generations, those in their 30s and 40s now. Still, it's a good idea to follow what's happening, because if Congress waits too long to act, it could result in more drastic changes. Right now, there's growing pressure to pass some kind of reform by 2027 or 2028, especially with elections coming up and public support for Social Security running high. I'll keep covering those developments as they unfold without any hype or fear tactics. Now I want to shift gears for a second and talk about taxes, because a lot of people are surprised to learn that Social Security benefits can be taxable. It depends on what the IRS calls your combined income, which includes your adjusted gross income, non-taxable interest, and half of your Social Security benefits. If you're a single filer and your combined income is between $25,000 and $34,000, up to 50% of your benefits might be taxable. And if you're over $34,000, you could pay taxes on up to 85% of your benefit. For married couples filing jointly, those thresholds are a little higher, $32,000 and $44,000. But here's the frustrating part, those income thresholds haven't been adjusted for inflation since the 1980s. That means more and more retirees are getting taxed on their benefits even if they're not wealthy. There are some bills in Congress that would fix this by either raising the thresholds or eliminating taxes on Social Security altogether for lower income seniors. But none of those proposals have passed yet, so for now, you'll want to plan accordingly. If you have income from a 401k, pension, or part-time work, talk to a tax professional or run the numbers using IRS worksheets to see how much of your benefits might be taxed. Before we wrap up, I want to quickly warn you about something that unfortunately just keeps getting worse: Social Security scams. These scammers are getting smarter. Some of them sound very official. They might call you claiming your Social Security number has been suspended, or that you owe back benefits, or that your payments will stop unless you give them your bank info. It's all fake. The Social Security Administration will never call you to demand money, threaten your benefits, or ask for personal details over the phone. If you get a call like that, hang up. You can report it at oig.ssa.gov, and if you have any doubts, call your local SSA office directly using the official number, not one from a caller ID. Now, before we go, let me share that one simple mistake that causes more headaches than almost anything else: not keeping your account information updated with Social Security. Whether it's a change in your mailing address, switching banks, or even changing your phone number, any of that can disrupt communication or delay payments. You can easily log in at ssa.gov or call them to make sure your info is current. It only takes a few minutes but can save you weeks of stress if something goes wrong. So, that's your full Social Security update for April 30, 2025. We covered COLA projections, May payment dates, what's happening in Washington, taxes, and scam alerts, all real, current, and hopefully helpful to you or someone you care about. If this video helped clear up any confusion, please give it a thumbs up and consider subscribing so you don't miss future updates. And as always, drop your questions in the comments. I try to reply to as many as I can. Thanks for spending a few minutes with me today. Stay safe, stay informed, and as always, secure your benefits.